for bankers. Okay, everyone, I hope you are all doing well and you have already got yourself registered because the end date is approaching soon. So I hope you are utilizing your best foot. You are utilizing all this valuable time towards registration and the basic working for the examination altogether. And if you haven't started it yet, then please hurry up. Our courses are right now available at the lowest price. It is at 81% discount, everyone. So please check it out right away. Okay, okay, everyone. Now let's move on further. As you already know, the practice series is going on. In this case, I am discussing all the various chapters blended in one particular class, and we are dealing with different areas altogether, right? So first of all, please share the session, like the session, and share it among your peers, everyone. Small things from your side definitely plays a very important role for us. So please share it among the peers. Done? Chaliye. Now, everyone, let's look at the questions that we have in this specific area, right? Acha, everyone, and check out our website right away so that you get our courses at the lowest price. Done? Chaliye. Now comes the next point. Here comes the first question, everyone. Banking definition comes under which act? Banking Regulation Act 1949, RBI, or Negotiable Instrument Act, or Regional Rural Banks. But the banks are defined as those organizations which are accepting deposits as well as providing loans, isn't it? That is what we call a banking company, है ना? So this is defined under what? RBI defines it or their own act? The actual act is called Banking Regulation Act, everyone. So in this case, the correct answer is A. That is Banking Regulation Act 1949. This defines the definition of a bank there. Okay? The answer is A. Reserve Bank of India is a different scenario altogether. It talks about the RBI, RBI and its affiliations further. Then we talk about the Negotiable Instrument Act. Negotiable Instrument Act deals with bill receivable and bills payable, everyone. And regional rural banks are basically covered under the Act of 1976. When we talk about a general definition of a bank, it is given under A only, Banking Regulation Act. Next question, everyone. Prepaid expenses and outstanding expenses are taken into account by a firm on the basis of which of the following concepts? Money measurement concept, accrual, accounting basis, or cost concept, or dual aspect concept. What's going to be the answer, everyone? What's going to be the answer? Prepaid expenses and outstanding expenses. See, prepaid matlab paid before time, and outstanding are the ones which are currently something which we haven't paid yet. है ना? That is the difference. And normally, if I look at the cash basis, what will happen? On cash basis, things would be recorded as and when there is a point. Either we are paying, either we are receiving. Isn't it? So, in this case, when we are using this method, money, accrual, cost, or dual, in this case, that is accrual basis of accounting, which says even if you haven't received the money, it doesn't matter. You will record it in the books of accounts. Then everyone? Chali. Now comes the next point. Let's move on to the next question, everyone. The next question says, health of a proprietor which affects the business activity and hence the profit is not recorded in the books of accounts of the following: business entity concept, money measurement, realization, or going concern concept, everyone? What's going to be the answer? Health of the proprietor. Everybody, what's going to be the answer? Chali. Now let's look at this point. When we talk about the health of a proprietor, this is based upon money measurement. He's well, he's unwell. Then this is all a part of money measurement. This means you cannot talk about finances in terms of a person's health now. A person's health will not affect a business until unless we look at it the non-financial manner. If you're looking at the financial manner, then it is not affecting. You know? Then everybody, chaliye. Now let's move on to the next point. This is a question regarding general accounting principles, which is called GAAP. They are regulated by financial accounting standard boards or government accounting standard boards. Is it both of these or any of these specifically, everyone? Is it both of these or any one of these only? See, the answer to the generally accepted accounting principles are the methods which are accepted for the use in the entire country. The answer is basically both. Both of them are used. In currently, earlier India had ASB, Accounting Standard Board, and right now we are working with National Financial Reporting Authority. NFRA has taken over the entire working of the making of this. Okay? What is the denominator of inventory turnover ratio, everyone? Just think about the entire portion. Everybody, what's going to be the answer? In terms of ITR, ITR is called inventory turnover ratio. ITR can be stated in such a way that this is based upon COGS upon average stock. Okay? This is COGS divided by average stock. Average stock matlab what is our opening, what is our closing divided by 2. That is called ITR, everyone. Done? This is called inventory turnover ratio. Let's look at the next question now. This is called ITR. अच्छा वैसे overall when we talk about ITR ना, ITR is called as inventory turnover ratio, a ratio which talks about the conversion of the goods from raw material to finished. ठीक है? That is how we define this specific area. And when we talk about this specific portion, then ITR higher is a good point. That means the organization is working well, right? So in this case, ITR is one of the activity turnover ratio or activity ratios, or also called individually turnover ratios as well. Higher the ratio, better it is. And one more thing, since you're talking about the entire formulas, COGS is equal to opening stock plus purchase plus direct expense minus closing stock. The answer was D. Done. Interest rate elasticity of the bond. What is interest rate elasticity of the bond, everyone? Interest rate elasticity can be stated as something which is when the interest rate changes, obviously it has a positive or a negative impact on the business. है ना? It can have a positive impact, it can have a negative impact. Always a number, a negative number, then always a positive number, and then we have positive or negative number depending on the market condition, or positive or negative number depending on the market value. Interest rate elasticity of the bond, if you change the interest rate now, if it goes higher, your bond will always have a higher value. If your interest rate is lower, then bond will have a lower value, isn't it? Then it is always a positive number, because the direct relationship is positive. That means if you increase your interest rate, the demand of the bond will go higher, and if this is related to this specific bond, then what will happen? The price will also increase. Done, everybody? Chaliye then, let's move on and talk about the next question. It is always a positive number. Depreciation is more by which method during the first and second year? Straight line, double declining, written down, or sum of digits method? More in the beginning and lesser in the end. According to you, which one would it be, everyone? But the straight line method says the same value. Double declining method says if you are using straight line, then obviously you're using it just one particular time. If you're using it in terms of two specific shifts, obviously it would be a bigger trouble for us, na? Then what will happen? In that case, there would be one specific thing that you and I can say. In this case, if we look at the change there, then what will happen? The double declining method goes just like similar to straight line. Sum of digits method also has a specific area where depreciation is more. But one thing is for sure, under the area of depreciation is more by, वैसे actually ना, the highest is there in written down value method. Among the ones, all the 3BCD has this, but they have chosen the double declining method. But I would go for written down value method as well. So this question requires little paraphrasing. Okay? Because all of this requires more in the beginning and lesser in the end. What will be the effect of if the sales return of 50,000 posted 48,200 and purchase return is 46,000 posted 47,800? Acha, there is a sale which is undercast, so the profit is reduced. By what amount, everyone? This is 50,000 minus 48,200, giving me an amount of 1,800. Profit is understated. And 46,000 minus 47,800. अच्छा, sales return है वो. The sales return, that means my sale is shown more by 1,800 rupees because I forgot to lessen this amount. So this is my income overcast and expense, which was 47,800 minus 46,000, giving me an expense of 800. My income is overshown, expense is overshown by the same amount, so that means profit and loss will increase by the same amount. Acha. Purchase return, everyone. This means, first of all, sales is shown more. If I return the goods and it is still shown more, then the purchase is also shown more. Income is shown more and expense, अच्छा expenses shown, ठीक है. Everyone, purchase return is actually my income. पता है क्या हुआ? Why I showed the expense of 47,800. While did I pay 47,800? No, my expense is overstated. This expense in the crux is income overstated and expense understated. Then you have to add both of these. Okay, this will become 3,600 rupees altogether. Done. Done, everyone? Done? चलिए, now comes the next point. Next answer is your P&L is increased by more amount. Now moving on to the next point. Next question. The cost of retained earnings is generally considered lower the cost of issuing new equity, equal to the cost of issuing new equity, higher than the cost of issuing new equity, or irrelevant to the cost of capital calculations. What's going to be the answer, everyone? What's going to be the answer? The cost of retained earnings. पता है, generally it is shown as if it is less than equity, but in actual it is equal to the cost of equity. Why? Because normally what happens is whenever we have retained earnings is basically the money that we didn't take out of the business. While it belonged to the business itself, but we didn't take that money out of the business. You know, so if you're not taking that money out of the business, the equal to the cost of issuing new equity. In this case, whenever we issue retained earnings and equity have a positive relationship. Why? You didn't take that money out, it is still there in the business, it is called equity. So वैसे it is given as A, but I would still go with B. In a few books it has proved it is A, but the correct answer should be B. ठीक है? Chaliye everyone, before I end my session, let's go on to our website first. Let me show you our website. This is our Okay, everyone, before I end my session, first of all, go to our CIB, JIB area. At this point of time, all I can say is there are so many options available, but if you're looking forward towards a JIB preparation, at this point of time, what we have introduced is JIB May 2024. Our revision batches are here, everyone. Go for the English medium revision batch. All the 4 subjects would be covered here. All you need to do is use the code by 541 and get the course right away at 79% discount, as 79% discount is going on. So please hurry up and check it out right away, because this is definitely there. So if you're planning for it, then you can get for 1826.79 only. Rest, if you're planning further, then you can definitely take up our Mahapack as well. Double validity is going on. All the comprehensive revision batch, numerical batch, crash course, everything is included, along with mini marathon, Maha marathon, and ebooks, test series, everything included. Just apply it and you get for 6298.95. Use the code Y541, get 80% discount right away, everyone. Don't forget to download the app, because without downloading the app, you will not get this much discount. So please check it out on our website or in our app for further details, and get this particular opportunity for your benefit as early as possible.